Hello and welcome. Moss Adams is pleased that you joined us for today's session, Navigate Costs and Compliance in Government Contracting. Before we begin, I'm going to play our housekeeping video.
Welcome and thanks for joining us. Moss Adams webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry, if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves, and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, we have 2 presenters with us today from Moss Adams. We have Rich Weber, partner, and Karen Melendez, Senior Manager. Their bios and contact information are located in your webcast console. And now I would like to turn the floor over to Rich to get us started.
Hi, everyone. I'm Rich Weber. I'm a partner here with Moss Adams. I work in our LA office. I've worked with government contractors for about 15, 16 years and all things federal income tax related and also federal contracts compliance. So happy to be here with everyone, and I'll turn it over to Karen to introduce herself.
Hi, good morning, everyone. Karen Melendez. I'm a senior manager here at Moss Adams, and I also work primarily with government contractors. I spend a lot of time helping them set up their DCAA approved accounting system, also help train their teams on these requirements, assist with the preparation or review of ICE models, and can also help support, prepare for or during a DCAA audit. So happy to be here with you today.
Thank you, Karen. So thanks everyone for joining the webcast today. There's a lot going on in the federal administration at the moment, and the areas that we're going to cover today are some of the basics surrounding federal contracting. So they should be applicable for the foreseeable future, but obviously things are changing rapidly. But we will get to through the items on the slide here. The first area that we're going to dive into is just the federal acquisition regulation. It's also known as the FAR, and really understanding the FAR is crucial as it lays really the groundwork for all government contracting practices and and ensures that we adhere to the necessary legal and regulatory framework. The FAR is a very large set of U.S. code, about 1,700 pages. It's constantly changing, but we just wanted to touch on that at the very beginning. The next area that we're going to cover is really the Defense Contract Audit Agency, or the DCAA. And the DCAA plays really a vital role in ensuring compliance with federal regulations and standards. We're going to discuss how their oversight impacts contractors and the importance of really maintaining transparency and accountability, for financial practices. We're going to go in a little bit into DCAA approved accounting systems. And an approved accounting system is really essential for successful government contracting. And we're going to highlight why having a robust accounting system is really critical for managing contracts effectively. Then we're going to go into gaining a basic understanding of cost accounting standards, also known as CAS. And CAS really governs how costs are measured and allocated to government contracts. And then finally, we're going to dive a little deeper into how to calculate indirect rates and distinguish between allowable and unallowable costs. That's a big area that's applicable to federal contractors. Knowledge in this area is really vital for ensuring that your cost proposals are compliant and that you're maximizing your reimbursement for allowable expenses. So, really by the end of this training, with just a short period of time, you should have a solid foundation of these areas, or at least a basic overview, and hopefully you can be equipped with some good tools necessary for successful engagement in government contracting. So. Before we dive into the content, we always like to give a brief overview of Moss Adams and kind of who we are. We're a national CPA firm. We've got close to 5,000 people across 30 plus offices across the U.S. I think we've got clients in all 50 states. And our government contractor solutions group really focuses on assisting contractors with some of the areas that are on this slide and on the next here. FAR compliance consulting, indirect rate preparation and analysis, like Karen mentioned, DCAA compliant accounting system design and implementation, ICE models, CAS implementation, and the like. And then we really serve, our group as it is serves a lot of different industries, obviously defense contractors, space and satellite and technology, as well as professional services are big on the government contracting side. So we've kind of highlighted some of those on that slide. So that leads us already up to our very first polling question. So I'll kick that over to Amy.
All right, thank you, Rich. So the first of the 4 polling questions is up. The polling questions are located right on the slides that we're presenting. So if you can't see it, you may need to hit F5 to refresh your console. But the first one is, how familiar are you with the Federal Acquisition Regulation, the FAR? A, very familiar. I work with it regularly. B, somewhat familiar. I have reviewed parts of it. Or C, not familiar. I am new to government contracting. And then to respond, please click the button next to the answer you choose, and then make sure to hit the submit button. All right, most have responded. We'll do 5 more seconds here. And here are the results.
Thanks so much, Amy. Okay, so it looks like about half the group new to government contracting, so not familiar at all with the FAR, and then about 30% somewhat familiar, and then the lucky 21.1% there that work with the FAR regularly. So we'll probably err on the side of staying somewhat at the basic level, but should be a good refresher overview for all. So, oh, and I should stress that there's a Q&A that I believe a box that you can enter questions into. Hopefully at the end we'd have time to get to some of those questions. So what is government contracting? So, at its core, government contracting is the process through which commercial companies engage with local, state, and federal governments to obtain and fulfill contracts. So it's gotten a little bit of press of late in the last 60 days with the new administration focusing on streamlining and federal spending. And so it's a little bit more visible than it was, say, prior to this 2025. But the process on the whole is essential for the functioning of government agencies. And it really allows the agencies to leverage the expertise and resources of the private sector. And so if you look at, what is a government contractor, it's essentially a commercial enterprise that provides goods and services for public government agencies. All government contractors are really compensated for their work with funds that have been appropriated by Congress. So this means that the money used to pay for these goods and services comes from taxpayer dollars, and that really makes accountability and compliance critical in this field. So throughout this session, we'll explore the various aspects of government contracting, really including the types of contracts and some of the regulations that govern this sector. And understanding these fundamentals will really help you navigate the complexity of working with government agencies effectively. So, contractor analysis. So if we just can take a moment to clarify the distinctions between a prime contractor and a subcontractor within the realm of government contracting. So these are words that if you're in this world or about to enter into, will be you'll hear a lot. The prime contractor is really the primary entity that holds the contract directly with the government. So this organization oversees the entire project, really ensuring that all regulatory requirements are met and that all deliverables are achieved on schedule. So for example, consider a defense contractor responsible for developing a new weapons system for the Department of Defense. They're accountable for the overall success of the project. So then if you get to, the next major contractor type is a subcontractor. So, and a subcontractor is really engaged by the prime itself to carry out specific tasks or provide specialized services. So these include areas like IT support or engineering expertise, for example. And it's really important to note that subs really report to the prime contractor and not directly to the government. So an example would be, an IT firm that's tasked with implementing a cybersecurity system for a federal agency, working under the direction of the prime contractor. And often it should note that often some of the requirements of the prime are pushed down, so to speak, to the subcontractor. So if there's certain clauses in a subcontractor agreement that are cited from the FAR, often they come, as a result of the prime being subject to those clauses. Really the info we share today is going to be valuable for anyone in government contracting, whether you're functioning as a prime or a sub. So what is the FAR? So this will be a good place to pause for a moment for the 50% that are brand new to government contracting. So I often relate the FAR to, by order of magnitude, the IRS code is some 7,000 pages of US code. And the FAR last that I checked was 1,700 plus pages. And so it's US code, and it's really a comprehensive set of rules that governs the overall procurement process for federal government agencies. So its primary purpose is to really ensure that acquisitions are conducted fairly, transparently, and efficiently, promoting competition and achieving the best value for taxpayer dollars. So, the FAR applies to all federal executive agencies and covers various topics, including contract formation, pricing, contract administration, and really providing a uniform policy framework. And the FAR itself is organized into parts that address different aspects of acquisition, really ensuring consistency across government contracting. The FAR is, as stated before, is regularly updated to reflect changes in laws and policies. So contractors really must stay informed about these amendments. And I would imagine with everything going on in the new federal administration that you're going to see a lot of changes in the FAR over the next 12 to 24 months. And really understanding the FAR itself is really essential for contractors to navigate the procurement process and really to ensure compliance with federal regulations. So now we're going to kind of dive into the structure of the FAR on the next handful of slides. So this chart is kind of gives a visual overview of how the FAR is kind of broken down. So really it's made up of two what they're calling volumes, which encompass all the regulations governing federal procurement. So the consolidated format really makes it easier for users to access and reference the entire set of regulations in one place. And then within the FAR volumes, there's several subchapters that group related parts together. So each subchapter focuses on specific themes or areas of procurement. So for example, subchapter A covers general policies and procedures, while subchapter B deals with specific types of contracts and their administration. So really the way this is organized allows users to navigate the FAR more effectively and really directs them to relevant sections based on their needs. And then kind of lastly, the far right column there, parts, you'll hear in government contracting, the word part used in reference to certain quote parts of the FAR. So, the FAR itself is divided into 53 parts presently, each designated by a number. So then each part really addresses a specific aspect of the procurement process. And then each part is further divided into sections that provide detailed guidance and requirements, making it easier to find specific information. So this slide kind of explores the hierarchical structure of the FAR, really focusing on parts, subparts, sections, and subsections. So as we mentioned previously, the FAR consists of 53 parts, each designated by a number, covering broad topics. So for example, Part 15, contracting by negotiation, details procedures for negotiating contracts, including source selection. Then each part contains subparts that focus on the specific areas. So in the graphical there, subpart 15.4 addresses contract pricing. And then, the subparts being further divided into sections that provide detailed guidance. For example, part 15, section 15.404 discusses cost analysis principles for evaluating proposed costs during negotiations. And then the subsections being divided further down into even more detail. Section 15.404-1 specifically addresses the requirements for cost analysis of proposals. So really the structured organization really allows users to easily navigate the FAR, moving from broad policies down to specific requirements. And having a general understanding of that hierarchy is somewhat crucial for effectively locating and interpreting the regulations that govern federal procurement. And obviously with AI tools that are out there now and are coming out quickly, it's a little bit easier to dig in and find the right FAR reference as applicable to your contract. So what is the Defense Contract Audit Agency, or the DCAA? So really the DCAA is an agency within the U.S. Department of Defense that's responsible for ensuring that government contracts are executed in compliance with federal regulations and standards. So some key points to understand about DCAA. The purpose. So the primary mission of DCAA is to really provide audit and financial advisory services to the DoD and other federal agencies. So those services really include the adequacy of contractor accounting systems, assessing the allowability of costs, and really ensuring compliance with the FAR and CAS if applicable. So the importance for contractors, is really understanding DCAA's role is critically important. So compliance with DCAA audits can really significantly impact contract performance and payment. And so a favorable audit can enhance a contractor's reputation and lead to more business opportunities, while obviously unfavorable findings could result in cost disallowances and contract disputes, which you don't want. So understanding DCAA's role is really important. Types of DCAA audits. So, the four major categories of DCAA audits are kind of displayed on this slide. So we'll go through each one. So pre-award surveys. This is before awarding a federal contract, the government really may, keyword is may, request a pre-award survey to really evaluate whether a contractor has the financial capability, the accounting system, and internal controls necessary to perform on a cost reimbursable contract. So these are often, as stated, pre-award. Before the contract's awarded, DCAA will come in and look at these areas. So we get a lot of calls about those types of audits. Forward pricing audits is the next major category. So really the DCAA reviews contractor cost estimates and forward pricing proposals, really to ensure they're reasonable, allowable, and allocable. And so these audits really help the government negotiate fair contract prices. So you might see more of these types of audits under the new federal administration. So the next type, the incurred cost audit. This is really for cost reimbursable contracts, and the DCAA audits the contractor's actual costs after the contract period, really to ensure claimed costs comply with the FAR and contract terms. So we see a lot of those audit types as well. And then the last major category, DCAA really also performs special audits based on specific agency requests. So these can really include compliance audits, labor floor checks, audits related to defective pricing claims, and the like. So, and really each of these audits plays a crucial role in maintaining the integrity and cost effectiveness of government contracting. So having a good understanding of the audit types can really help contractors prepare and remain compliant. And with that leads us to our second polling question. So I will turn it over to Amy.
All right, thank you. So the second of four is, do you currently have a DCAA approved accounting system in place for government contracting? And your options are A, yes, B, no, or C, unsure. And then also just a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. All right, and here are the results.
Thank you, Amy. So it looks like about 30% already have a DCAA approved accounting system, which is great. About a quarter are a no, and then the other 43%, probably the folks that are new to government contracting, are not sure on that, and that's okay. So with that, I will turn it over to Karen Melendez.
Thanks, Rich. So I'm going to dive into some of the more accounting compliance requirements relating to government contracting. Rich gave a great overview of the FAR and DCAA, which provided some foundational information and the regulations that guide it. So now we'll dive into some of the accounting compliance. So as Rich mentioned, one of the important aspects of government contracting compliance is the accounting system. And the accounting system, as defined by DFARS, which is the Defense Federal Acquisition Regulation Supplement, provides some guidelines on what actually makes up an adequate accounting system and how is that assessed prior to awarding a contract. So as you can see below, we have a screenshot of the DFARS clause, the Accounting System Administration. And the DFARS, it defines an accounting system as a system that complies with this criteria to provide reasonable assurance that applicable laws and regulations are complied with, the accounting system and cost data are reliable, the risk of misallocations and mischarges are minimized, and that contract allocations and charges are consistent with billing procedures. So, really these criteria are going to allow the government to rely on the reporting and the costs that are coming out of that system. And just to clarify, when DFARS references the accounting system, they're not referring to the software that's being used. It's referring to the total system, the policies in place, the people, the processes, as well as the software. So this next slide will sort of break that down a little bit, with a little bit more detail. So, the accounting system means the contractor systems or system for accounting methods, the procedures, controls to record, gather, classify, analyze, summarize, interpret financial data for reporting and compliance with laws, regulations, management decisions, and it also may include subsystems for specific areas such as indirect costs, direct costs, compensation, billing, labor, and general information technology. So I did see a question come in regarding, when a DCAA, a software company advertises that their system is DCAA compliant. It basically, they're claiming that they have sort of the framework for the company to then implement some of these things that we'll go through on the next slide. Timekeeping systems, segregation of costs, really that system is sort of set up in a way that you can design your practices around it to be compliant for DCAA regulations. So the form that gets evaluated when a contractor goes through a DCAA pre-award accounting system audit is called the SF 1408. It's the standard form used by the government to evaluate the accounting system of a contractor. And that's going to help determine whether those accounting practices are adequate for determining costs applicable to a government contract. So this form, it's basically a checklist of accounting system criteria that must be met in order for that system to be considered adequate. So these areas, and we'll go through, some of the key ones on the next few slides, but areas such as cost accounting, billing, timekeeping, and internal controls. And the DCAA, they're the agency that's responsible for conducting audits of government contractors, including the pre-award accounting system audit. And typically that's an audit that will be requested by a contracting officer prior to a cost reimbursable contract being awarded. And really that's because the government's taking on the risk with that type of a proposal and cost, because they're relying on the contractor's cost accounting practices that they're going to ultimately be paying the contractor for. So we'll go through some of the criteria in the form the next few slides. So the first one is GAAP. So one of the criteria is that the accounting system is in accordance with U.S. generally accepted accounting principles. So I imagine most of you are familiar with GAAP. Some of your businesses might be keeping your books in accordance with GAAP. GAAP is a set of rules, standards, practices that guide financial accounting and reporting in the U.S. So if you keep your books on GAAP, it might be because you need a financial statement audit or report to investors, or if you have a DCAA accounting system approved already, then one of the first criteria is that your books are on GAAP. I see with a lot of clients that I work with, they'll keep their books on a cash basis. It's smaller for more common for smaller companies to do that, especially if their main reporting is for tax returns. But as you grow and as you have the requirement to have a DCAA approved accounting system, you will need to make that change for GAAP. And, really GAAP, it ensures that financial information is reported consistently and accurately across different organizations. That way the government or different regulators or investors can more easily understand and compare financial statements, because the same accounting principles are being applied consistently. So some characteristics of GAAP accounting would be it's a accrual basis, not cash basis. So your recognized revenue as it's earned, not when you collect it, and then you're matching expenses to the period that they're incurred and not necessarily paid. And that really just promotes consistency and completeness within an organization's financials. One of the next criteria on the standard form 1408 is proper segregation of direct costs from indirect costs. It's pretty self-explanatory, but I like illustrating it by looking at a P&L. So on the screen now you can see an example profit and loss statement for just kind of a sample engineering firm. It's pretty straightforward and simple. Revenue less expenses equals net income. So this is not a compliant presentation for a company to have their costs and their P&L set up like this, because we're not segregating direct costs from indirect costs. All of the expenses are kind of lumped together. So the first step in segregating direct costs from indirect cost is really having a policy and a procedure of defining what is a direct cost versus what is an indirect cost. And a big part of government contracting is having your policies and procedures documented. So when DCAA comes in, they can, learn what your policies are and then also make sure that you're consistently following them. That will give them the confidence with relying on your cost data. So once a contractor defines what is a direct cost and what is an indirect cost, they'll have a section in their policy that can explain the difference between these types of costs. And employees should also be trained in this so that they can code transactions properly. So in government contracting, a direct cost is an expense that can be specifically attributed to a particular project or contract. So some examples of direct costs would be direct labor, direct materials, direct travel. So if you have an employee that's working, specifically on one contract, they'll code their time on their timesheet, and we'll get into that in the next few slides, but they'll code their time to that specific contract or direct labor cost objective. Whereas an indirect cost, it's an expense that can't be directly attributed to a specific project or contract, but it might be necessary for the overall operation of the business. So, you know, an indirect cost might be rent, or, you know, your accounting manager or controller. So, you know, those are costs that are equally as important in running the business, but it's not a direct cost attributed to a contract. So we're going to take the same P&L, and on this next slide here, we're going to show the breakdown of segregating direct costs from indirect costs. So, you know, you can see there's a lot more going on. It's the same financial information. It's just recorded into the general ledger, into a structure that's much more, you know, defined and compliant with DCAA and FAR requirements. So you'll see, you know, revenue stays the same. Really, the cost accounting practices are for costs, not revenue. But basically, you'll have the direct expense section where you'll see direct labor, direct subcontractors, and then under indirect expenses, you know, you'll notice there's several different sections with indirect expenses. And these are what's known as the indirect cost pool. So one of the requirements on the standard form 1408 for an accounting system is, you know, to segregate costs into homogeneous cost pools. So what that means is, you know, segregating costs that are incurred or driven by a similar purpose. So some examples you'll see here, you know, facilities expense. This pool will accumulate facilities costs. Those can be things like rent, depreciation, insurance, repairs and maintenance, utilities, property taxes, things like that. And once these costs are pooled, they'll get allocated to an overhead pool or a G&A pool based on, you know, a usage measure such as square footage or head count. So if you have, you know, 5 G&A employees and 10 overhead employees, you know, utilizing a certain office space, you know, you might split that cost based on that head count, or vice versa. If you have, you know, a certain square footage where certain departments reside, you know, you'll come up with your base on how you're going to allocate those costs. A couple other of the indirect cost pools we can go through here are, you know, fringe benefits. So those are going to be, you know, your payroll taxes, your, you know, retirement plan contributions, holiday, paid time off, things like that. Just fringe expenses that, you know, are not a direct expense, but they might relate to your direct labor employees, or they might relate to your indirect labor employees. So you'll accumulate all of those costs into a fringe pool, and then allocate those. Typically that will be based on, you know, salaries. So salaries in each of those cost pools, and you'll allocate those out. Couple more here. Overhead, those are costs incurred in supporting operations or contract activity, but by their nature, they can't be identified to just one contract. So, you know, a lot of times those will be, you know, technical software or equipment or labor, things like, you know, just quality assurance type personnel that are kind of overseeing all the different contracts. And this pool will then typically get allocated out based on direct labor, because the people working on the contracts are the ones that are really being supported by those costs. And then general and administrative expenses, or the G&A pool, those are going to be the ones that are just more incurred in order to run the whole business, but really don't relate to the operation or the contract performance. So things like legal or human resources, or maybe office supplies. So those will get allocated also based on a base that, you know, is determined by your company, and there's a few acceptable bases according to the government. So, you know, you'll pick that one and define that in your accounting policy. And then the last illustration we have up here of an indirect cost pool would be unallowable expenses. And I know Rich touched on that a little bit earlier, but basically a contractor is going to want to segregate their unallowable costs in a certain way where they won't be included in claims to the government. So in this example here, interest expense, which is, you know, an explicitly unallowable cost, we have that in a separate cost pool. And we'll dive into unallowable costs in a little bit more detail in the next few slides. But now we're going to jump into one of the other criteria on the standard form 1408, and that is that the contractor must have a timekeeping system that identifies employee labor by intermediate or final cost objective. And really, a final cost objective is going to be a specific project. So, a customer, a contract, something that you're going to ultimately charge the government for. Whereas an intermediate objective is something like, overhead labor or holiday pay, where that labor will get coded into one of those intermediate pools, which will then eventually get coded to another cost pool and then indirectly to a contract. So you'll see here, this is just a snapshot of a pay period for 2 employees. You could see they're logging their time daily. They have the number of hours incurred, the customer, the project, whatever level of detail, this contractor set up their timekeeping system in. But this is what's important, is having those different cost objectives set up so employees have the ability to code to that. And I'm going to highlight a few other things on this next slide that are important with respect to this. So, one of the requirements from DCAA is that all time is recorded daily and that all time worked is recorded. So, you might have an employee that gets paid salary and they don't get paid any overtime. But if they work 10 hours in a day, they need to make sure that they record 10 hours to a specific project. Same thing if the employee works 8 hours and they split their time, 2 hours between one contract and 2 hours between another, they're going to split that time accordingly. So, you could see these are requirements, and some other requirements for a DCAA timekeeping policy that you want also documented in your manual and make sure that your employees are trained on this is recording time daily, and recording time by different time efforts, whether it's direct or an indirect cost objective. All sick time, vacation, holiday, or any other leave that they're getting paid for should be recorded on the timesheet. The timesheet must be signed off by an employee and then approved by their supervisor. So timesheets can be manual, in Excel or paper, but there's a lot of, really kind of efficient and easy to use online tools available, web-based, where employees can either log in, on their phone or on a web-based application. And those have a nice audit trail, which is helpful when DCAA comes into audit because they'll want to see sort of that approval process and the timeliness of that. Any changes or corrections should be made only by the employee. And really, employees should be trained on those timekeeping procedures at least annually. That way, everyone's on board and are doing what the policy is saying that the company's doing. So then the next criteria is a labor distribution system that charges direct and indirect labor to the appropriate cost objective. So this criteria really goes hand in hand with the timekeeping system that we covered on the previous slides. But I'll just walk you through what's happening on this slide. This is called a labor distribution, and many accounting softwares will handle this distribution automatically if you're using, a Uninet or a Deltek. But, other systems, particularly QuickBooks, they don't have that functionality built into the software. So you'll need to do the labor allocation manually with a journal entry. But it's really, I think it's good that even if your system does handle it automatically, that you have a good understanding of, what's happening behind the scenes so that you can explain it to an auditor and also make sure that, your accounting system is working properly. So just to walk you through this slide, on the top, you'll see sort of a salary per pay period for each of these employees, Smith and Jones. And on the bottom is just a pivot table summary of the preceding slide timesheets. And you'll see we have the total hours for each of those labor efforts summarized. And then based on the total number of hours that someone works in a pay period, you want to calculate an effective hourly rate and basically apply that rate to the number of hours worked for each cost objective. And if it's a salaried employee and there's number of hours per pay period fluctuates, then theoretically their effective hourly rate fluctuates. So that's really why it's important to record all time worked. And then you'll see in that last labor distribution column, those are really the dollars that are going to get assigned to each of those labor efforts. And that's, really the foundation of a DCAA approved accounting system from the timekeeping perspective, because DCAA wants to make sure that there's controls in place for the time recorded, and then how are those dollars, ultimately getting coded to those different projects. And then the next criteria that we'll go over is that there's a logical method of allocation of intermediate and final cost objectives, or a final cost to cost objectives. So again, there's a lot going on this slide, but it's really taking that same P&L example, showing the total costs in each of the pools that I highlighted earlier, and then coming up with the relevant base. So, you could see on the top left corner, the facilities allocation is going to allocate that $11,024 to overhead and G&A based on headcount. And those two numbers are flowing down to the bottom final cost pools, adding to those pools that had existing costs. And same thing with fringe. So fringe, we're taking the $11,930 and then allocating it based on all the different labor and wage amounts. And then we're also allocating those down to the different final cost pools. And then we get down to the final cost pools, we're allocating those based on labor or total cost, and you can see at the bottom we come up with what's known as an overhead rate and a G&A rate. And that's really important for a contractor to consistently define what goes into each pool and what goes into each base. And that's going to be applied over the organization and consistently amongst all of the contracts. So, you're not going to come up with one methodology for one type of contract and another methodology for another. That's one of the government's, principles, is to make sure that everything is consistent across all. And this slide just shows that allocation of cost. So you can see when you start with direct labor, apply a fringe rate. Each of these columns is a different cost, a different project. So you apply a fringe rate to the direct labor, then you apply the overhead rate, give the overhead allocation to each contract. You'll layer in any other direct costs such as travel or subcontractors, and then add in that G&A rate. And, you can see how all those costs at the P&L ultimately kind of trickle down, sort of like a waterfall, and then get allocated to each of those contracts. So the $287,000 that's in the total, that was our total cost, excluding the unallowable costs from our first P&L. So, all of those different criteria on the standard form 1408 for an improved accounting system really work together for sort of the ultimate, assigning those costs to different cost objectives. So another criteria on the form is that there is an exclusion from costs that are charged to government contracts, amounts that are not allowable per FAR Part 31. Or other contract provisions. So, FAR Part 31 has all of the explicitly unallowable costs, but your specific contract might not allow, for charging of travel or certain types of contracts. But this chart sort of highlights green means, generally always allowable. Yellow is, limited or conditional allowability, and red would be explicitly, always unallowable. So a contractor really should have in place whether they use a separate cost pool or a separate, project or some kind of class in their system to tag those costs that are, always unallowable. It's a way, to identify them and really make sure they're not included in any government billings. So as you can see, there are a lot of yellow, which is it depends. So, there's a lot of different costs that, may be allowable in some scenarios and may not be allowable. So it's really, the FAR will detail out a lot of those different criteria. So it's important to, really kind of become familiar with that based on, the types of expenses you have in your organization. Okay, so we're going to do the third polling question. I'll turn it back over to Amy.
All right, thank you, Karen. So the third of 4 polling questions is, what type of government contracts does your company primarily work with? And your options are A, fixed price contracts, B, cost reimbursable contracts, C, T&M contracts, so time and materials, or D, a mix of the above. And then just a reminder, you do have an option to submit questions for the presenters in the Q&A window. And we do only have about 10 minutes left, so if we don't have time to get to yours, we will do our best to follow up with you afterwards. All right, and here are the results.
Thanks, Amy. Yeah, so that's a nice mix. So I'm assuming the attendees that have the cost reimbursable contracts, you guys are familiar, with that, the DCAA approved accounting system, because that's typically one of the prerequisites. But, for those of you that don't have that yet, it's something to, kind of think about and work towards. So now we'll just kind of breeze through. I mean, the cost accounting standards, we could do, a 2-day course just on these, but really just to familiarize you with them, that they exist in case you come across it in one of your contracts, really just to have a high level understanding, we thought would be helpful. So really the cost accounting standards, they were established back in 1970, really just to ensure uniformity and consistency in cost accounting principles. So their primary goal was to regulate defense contractors and subcontractors and require them to disclose their cost accounting practices in writing. And really the goal of those and the main areas that they cover are the measurement of costs, the assignment of costs to cost accounting periods, and the allocation of costs to cost objectives. And something just to keep in mind that CAS applies to contracts, not contractors. So, a company may have a mix of contracts that are either, subject to full CAS coverage, which requires them to follow 19 standards. They may have a contract that requires them to follow only 4 of the standards, which would be modified CAS, or subject to follow either, both or full or modified simultaneously, or they may be exempt from coverage. So some common CAS exemptions, the one I see the most is a contract or subcontract with a small business. So if you're a small business, regardless of the size of your contract, you're likely exempt from CAS. Some other typical ones I see are if there's a contract or subcontract with commercial items, any contracts under 7.5 million or 50 million, which is the other trigger, or contracts that are awarded based on adequate price competition without certified cost or pricing data. So that's, some of the common exemptions from CAS. And really, this slide shows some of the 2 contract clauses that if, they're included in your contract, this will require you to follow it. So FAR 52.230-3 will be the modified coverage, and that's going to be triggered typically when a contractor who's not exempt otherwise receives a CAS award over 7.5 million, but under 50 million. And the full coverage standard, which is FAR 52.230-2, will typically be triggered when that contractor receives a single covered award over 50 million or an accumulation of awards of 50 million. And once they hit that full coverage, they'll be subject to all 19 of the standards and will need to submit the disclosure statement to DCAA and their contracting officer. And just a high level overview of the cost accounting standards. They're kind of broken out into, different areas that they relate to. So the first 4, which are just overall cost accounting matters, would be CAS 401, which is the consistency in estimating, accumulating, and reporting costs. CAS 402, which is the consistency in allocating costs incurred for the same purpose. CAS 405, which is accounting for unallowable costs, which we touched on earlier. CAS 406, which is the cost accounting period. And then the next section, classes, categories, and elements of costs. I mean, these are going to cover different measurements of costs like compensation related, asset related, insurance, deferred compensation, things like that, cost of money. And then the last four, those relate to indirect cost pools. So do you have a home office? How do you allocate that to your different segments? How do you allocate G&A to final cost objectives? How do you define and allocate direct costs and indirect costs? And then finally, how do you account for internal research and development or bid and proposal costs? So, really this requires a contractor to really define and lay out what are their practices and, making sure that they're following them since they're being disclosed to the government. And, one thing to keep in mind is the timing of compliance also varies within each of these standards. So once you get that first, either trigger contract for modified or full cast, some might be effective immediately, which are mostly those first four modified standards, whereas others will be effective in the next full cost accounting period. So within the cost accounting standards, the document, it will usually tell you the effective date of when it needs to be put in place. So we're going to wrap up quickly. I think we're just out of time. I think we have one more polling question. So today we went over the FAR. We discussed its significance in establishing uniform policies for government contracting. We talked about DCAA, explored its role in auditing contracts and ensuring compliance. We went over in detail what are important parts of an improved accounting system. We reviewed some of the standard Form 1408 criteria, high-level overview of cost accounting standards and how those apply to government contracts, and just a high-level indirect rate overview and how to calculate some of those rates and why distinguishing between allowable and unallowable costs are important. Okay, Amy, we'll do the next polling question.
All right, so the final polling question is, which of the following best describes your organization? A, prime contractor, B, subcontractor, C, government agency, or D, consultant or advisor? And while you're answering that, for those of you that would like a copy of today's slides, you can download them now from your console. And then we're also sending them out via email tomorrow, along with a recording of this webcast. All right, a few more seconds and we'll get this one closed out. Here are the results.
Okay, great. So again, a good mix. So we wanted to thank everyone for joining us today. We have the last few slides, which you're able to download, contain some valuable resources that I recommend you just keep handy as you navigate the complex requirements and the different compliance requirements for government contractors. So, one website I like to look at is the DCAA's website. They publish, all of their audit tools and work programs. So here's a couple of the ones we talked about today. Just the pre-award accounting system audit, just information for contractors really to kind of walk through the different requirements. Some of the regulations we talked about, the FAR 31 cost principles, cost accounting standards, the FAR, those are links. You can access those electronically. And then Moss Adams, we've done several webcasts over the past, I'd say, year or so, just different topics that you might find interesting. So here's a link to those. And here's contact information for Rich and I in case you'd like to, reach out directly. But thank you so much for joining.
All right, well, thank you, Rich and Karen, for a great presentation today, and then to our audience for submitting your questions to help guide today's conversation. As Karen mentioned, if you have additional ones, please send them over, and we would be happy to continue the conversation. And then if you met all CPE requirements, your CPE certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks as well. And then finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. And again, thank you for joining us, and take care, everyone.